Hi, Assalamualaikum. My name is Sadam Mukris. I would like to talk about small and medium-sized enterprise (SME). Malaysia adopted a common definition of SMEs to facilitate identification of SMEs in the various sectors and subsectors. An enterprise is considered an SME in each of the respective sectors based on the annual sales turnover or number of full-time employees according to the Ministry of Investment, Trade and Industry. For the first categories, which is manufacturing related service and agro-based industries. For micro enterprise, the sales turnover should be less than RM250,000 or full-time employees less than 5. For the small enterprise, sales turnover should be between RM250 and less than RM10 million, or full-time employees between 5 and 50. Last one, medium enterprise, the sales turnover between RM10 million and RM25 million, or full-time employees between 51 and 150. For the second categories, which is services, primary agriculture and information and communication technology ICT. For micro enterprise, the sales turnover less than RM200,000 or full-time employees less than 5. For the small enterprise, sales turnover between RM200,000 and less than RM1 million or full-time employees between 5 and 19. For the last one, medium enterprise, the sales turnover between RM1 million and RM5 million or full-time employees between 20 and 50. That's all from me.
Assalamualaikum and hi all. My name is Muhammad Zulhilmi bin Muhammad Kamil, student of UiTM Campus Segamat. The main challenges that faced by a small and medium enterprise, for example, poor customer knowledge, poor business enablers, lack of collateral or capital, lack of credit data, and low profitability. Without finance, small and medium enterprise cannot acquire or absorb new technologies. Also, they cannot expand to compete in global markets or larger companies. There are a lot of impacts that can face by the company. First, it's difficult to get capital financing. It makes difficult to expand the current business and create new business. Medium enterprise need the amount of funds for the repayment period and type of loan to suppliers. Most of the companies is rely on debt rather than equity to finance the cost of raw materials. This can lead to a reduction in net profit due to the company having to pay off debt in order to finance the business. And the second impact is higher demand for funding for automation and technology. This will happen to businesses that have automated their operation, especially in wholesale trade, computer and IT related services, as well as engineering, machinery, and equipment. Sufficient financial resources are very important to cover annual maintenance expenses. And the third one is economic uncertainty that can impact the financial stability. Uncertainty is not as easily measured as traditional indicators because it can occur due to various aspects such as from epidemics, inflationary, geopolitics, war, climate disaster, and development technology. Besides, the uncertainty can threaten financial stability. It could affect the risk of financial market, delay consumption and investment decisions by people and businesses. That can prompt the lenders to tighten the supply of credit.
There are many financing challenges faced by the SME that will impact their growth. One of the factors is lack of financial resources. This is because SME experience rejection from their financing application due to some reasons such as insufficient document, insufficient cash flow to meet repayment, and non-viable business plan. And this will impact business may lag behind competitor who can invest in marketing, technology and talent, and this also can lead to loss of market share, customer base, ultimately stalling growth. SME also struggle to secure financing may result to high interest loan or alternative financing option that can be costlier in the long run. This increase operational costs, reducing profit margin, and limiting reinvestment into the business. The next barrier facing by the SME company is lack of cash flow. The success or failure of business based on their cash flow of the company. SME often facing inconsistent cash flow, more cash outflow than cash inflow, result in business failure. This may impact on daily operation, resulting in inability to pay supplier, employee, or overhead costs. This can lead to disruption in production, inventory shortage, and decreased service quality. When cash outflow exceeds cash inflow, SME may resort to borrowing cover shortfall. This can lead to increased debt burden, high interest payment, and potential insolvency if the cycle continues.
Thank you for the great presentation. Before I continue this presentation, I would like to introduce myself first. My name is MAF503 and my contact number is 2024-807 and 308. For the question C, that is the comparison and contrast of financial resources, is first, bank loans. The benefit of bank loans is provide substantial funding for long-term investment or expansion. Second is offer structured repayment plans with competitive interest rate for creditworthy businesses. For the limitation of bank loan is first, stringent eligibility criteria including credit checks and collateral. And the second, long processing times unsuitable for urgent needs. Challenging Malaysian SMEs face in securing fund is first, collateral requirement. Many SMEs lack sufficient asset to secure traditional bank loans. And the suggestion for overcoming financial difficulty is stronger financial documentation. Is first, proper record keeping and transparent financial practice are critical for building credibility with potential lenders and investors. SMEs should adopt digital accounting tools to streamline their financial management. For the second challenging Malaysian SMEs face in securing fund is high competition for grants. Limited availability of government assistance result in fierce competition. For the suggestion for overcoming this financial difficulty is enhanced financial literacy. SMEs should invest in financial literacy programs to improve their understanding of budgeting, cash flow management, and financing options. Government and private sectors initiatives could support training and mentorship programs for SME owners. For the second challenge Malaysia SMEs face in securing fund is high competition for grants. Limited availability of government assistance result in fierce competition. For suggestion for overcoming financial difficulty is enhanced financial literacy. SMEs should invest in financial literacy programs to improve their understanding of budgeting, cash flow management, and financing options. Government and private sectors initiatives could support training and mentorship programs for SME owners. That's all from me. I would like to pass the presentation to Muhammad Danish. Thank you.
Thank you from Amal Hafiz. Before I start my presentation, let me introduce myself. My name is Muhammad Danish bin Sharif. My message number is 2024-273-212. I will continue the presentation about comparison and contrast of financial sources. The third financial source is peer-to-peer lending or P2P. Benefits. P2P lending can be an alternative way to finance a business or personal loan. The second, P2P lending can allow small business and entrepreneur to access capital from a pool of individual lenders. Limitation. P2P lending carries risk, including the possibility of yearly or late repayment. If repayment is late, the lender may experience delay in receiving what they are owed. We go to the next slide. Challenges Malaysian SME face in securing fund. Creditworthiness issue. P2P financing carries credit risk, as the risk borne by investors are tied to the repayment ability of the borrowers. This credit risk may be heightened as applicants for P2P loans may have poor credit histories that hinders their ability to obtain traditional loans from banks. We go to the suggestion for overcoming financial difficulties. Build credit profiles. Encourage SME to maintain clean financial record and establish a positive credit history. We go to the last part of financial sources, which is trade credit. Benefits. Improve short-term cash flow by deferring payment to supplier. The second, often interest-free within agreed credit terms. Limitation. Late payment penalties can strain finance. Second, limited applicability to operational expenses or expansion. We go to the next slide. Challenges Malaysian SME face in securing funds. Potential strain on relationship with supplier. Over-promising. Whether regarding the volumes, payment schedules or project timeline can strain the relationship and lead to dissatisfaction on both sides. Be honest about your needs and capabilities from the start. We go to the suggestion for overcoming financial difficulties. Promote timely payments. Policies such as penalty for late payments and incentive for yearly settlements can help alleviate cash flow issue. Additionally, SME could benefit from invoice factoring to manage delay payments. That's all our presentation from Group 9. Thank you.